y'all, welcome back to the Mindset, Markets, and Money series. If you're new here, my name is Amina, also known as the Neurodivergent Investor. And today we're going to get into the different types of options trading. In this particular lesson, we're going to talk about long-term swing trading using options. If you're brand new to trading, don't worry. I'm going to break it down step by step so it's easy to understand and easy to follow. I also offer a free Patreon group that has resources to help you better understand each lesson. So go to the description box and don't forget to sign up for that. So let's start with the basics. Swing trading is when you buy and hold a trade long enough to catch a swing or a solid move in the market. You're not trading in and out every day like a day trader, and you're not holding it for years like a long-term investor either. You're sitting somewhere right in the middle. The best part, you don't have to check your screen every day like a day trader, and it gives your trades time to grow, especially when you're using options. Now let's look at the difference between short-term and long-term swing trading. Short-term swing traders usually hold a trade for just a few days or weeks. They rely on charts and need to watch the market more often. It can be stressful and fast-paced. On the flip side, long-term swing traders hold positions for 4 to 12 months, sometimes longer. They focus on company news, earnings, and overall business growth, not just short-term price moves. So if you're busy, working a job, or just don't want to be glued to a screen all day, long-term swing trading is probably the better fit for you and what I choose to do personally. Here's a quick example using a stock called XYZ. A short-term trader might jump in and out a few times, catching small moves, but a long-term swing trader sees the bigger trend, gets in once, and holds it for months, making just one trade but catching a bigger move with less stress. All right, now let's talk about why options, especially long-term ones, are awesome for swing trading. First, you don't have to worry as much about time decay. Options lose value as they get closer to expiration. That's called theta decay, if you remember from our last video. If you haven't seen that, go back and watch that one. But with long-term options like LEAPS, that time decay is super slow, giving your trade time to work. You have time to let your idea play out. Long-term swing trades gives your ideas time to grow. And lastly, you're not thrown off by short-term noise. Markets go up and down all the time. But when you're in a long-term trade, you don't worry about those little dips and blips. You're looking at the big picture. Now, here's a real life example using an Apple stock. Let's say you notice Apple is growing its services business and you believe that growth isn't priced in yet. You buy a long-term call option called a LEAP when Apple is at $145. You pay $18.50 for an option and it expires in 8 months. Now remember, you're going to times $18.50 by 100 to get the full premium price. You hold it through 2 earnings reports. Apple jumps to $185. Your option is now worth $41. You more than double your money while the stock only moved up 27%. That's the power of using options for long-term swing trades. Now let's talk about how to find high potential trades using basic fundamentals. And don't worry, you don't need a finance degree to do this. I've learned how to do this in less than a year and I have no finance background. So what you want to do is look for undervalued stocks. Is the stock cheaper than usual? Does it look like the market is ignoring it even though the business is doing well? You want to also check for growth potential. Are earnings growing? Is there a new product, service, or expansion happening? Watch industry trends. See if the sector is heating up, maybe AI, clean energy, or cloud computing. Also, pay attention to leadership. Is there a new CEO? Is the company buying back shares or paying higher dividends? Look for big events, mergers, major partnerships, or problem-solving news. Those can all be game changers. Here's an example with NVIDIA. They've been growing fast because of AI. They launched new products and their earnings were expected to rise over the next few quarters. That's a great long-term swing setup. A LEAP option here would give you time to ride the wave. All right, so let's wrap it up with key points. Long-term swing trading means holding trades for 4 to 12 months. It works well for busy people. It requires less screen time and more focus on long-term growth. LEAP options give you low time decay and big leverage. You don't need to chase the market. Just follow solid companies with real growth potential. All right. That's it for this lesson. Remember to sign up for the Patreon to get access to the lesson's homework. And in the next video, we'll go a little deeper into how to do fundamental analysis, specifically for swing trading with options. Make sure you like, comment, and subscribe, and I'll see you in the next video.